Mike Tedeschi, Wealth Management Advisor, Prospective Wealth Planning. With this week's market breakdown video, we're going to take a look at the four major U.S. indexes, jump in, take a look at some commodities, as well as the U.S. dollar. Let's get right into it here. Not a whole lot has changed from last week. Markets are still up near those all-time highs. We had a little bit of a weakness in on Wednesday. That was mostly in on the Nasdaq. We'll get to that in a second. But the market held exactly where it was supposed to. The S&P 500 still trading up above those highs and continuing to push. So continue to watch for that move higher. As we talked about before, if we do fall back underneath that 3,600 level, that would kind of change my thought process, but as it is right now, we are up above that, so not a whole lot to be concerned with on a technical basis. We take a look in at the Dow, same thing. We're holding up over that all-time high on this. I'd like to see 29,000 hold, continuing its grind higher as well. We saw the Russell 2000 once again continuing to push. It has been a leadership name here over the last month or so as we've continued to see money rotate out of tech and into the mid and small caps. Just a beautiful kind of grind higher. There's not a whole lot to say. We need to hold above that 1750 zone from that breakout, and in between there's actually a support zone at 1800, which would be the first line of defense should we incorporate some more weakness. We take a look in at the Nasdaq, and you can see yesterday the Nasdaq's what had that big pullback. It was a little over 2%. The rest of the indexes held up just fine, and the Nasdaq held up fine too. I mean, it held that key 250 level. It's making a nice bounce here today, up over that 12,500. Looks really good. So those are kind of those key levels that we subsequently are continuing to watch. Now, what I want to look at here this morning is the U.S. dollar. Now, we back this chart up. We've talked a lot about that 91 zone. The U.S. dollar now setting up in what could be a bear flag underneath of that support zone. So looking for another potential leg lower here. If it does kind of bounce up above that, we have resistance in at 92. So those are going to be the two levels that we're going to watch in on the U.S. dollar. And, of course, that is going to have an impact on the commodities and the emerging markets in general. Emerging markets are right back up into that high resistance point from 2018 here, just a small bit away from those all-time highs. We're about 2% away. So that, of course, is going to be that resistance point, that all-time high right there at 1275. Up above that would be a huge breakout. And again, we've seen a lot of solid activity in the emerging markets here over the last few weeks. Now let's jump in and take a look at the metals here. Gold still holding over that important 1750 zone. I'm going to zoom back in here on a daily chart, look at this a little bit more granularly for you. We are still trapped inside this downward range, right? Every time we kind of found support right in here, made a nice bounce, we have not broken out of this range. Now, of course, we talked about this as a potential bull flag since we came from below. We really need to close back up over that 1900 level, and the major level is going to be that 1950 to really get this market going again. Silver has held up much better than gold, right? We've pointed that out in the last week's video. It did not make a new low on this push. It held above that 22, but it's still in a very similar type pattern. It's just instead of a downward channel, it's more of a wedge. And so we're going to look for that move back up over 25. Key level, close over 26. Now, we had a breakout out of platinum here over that 1046 zone, making multi-year highs. We can back this out on a weekly chart, and you can see that. We fell immediately right back under that zone, and you can see I've got an alert set right here at that 1,000 zone. I think a fall back underneath of 1,000 might negate this breakout here, but you can see what really happened. We got a breakout, we fell back down, we held that first line of support, we've actually pulled right back up over that breakout level. So continuing to watch platinum around that 1,050 zone, over it. Very, very good looking chart as we've got, again, I'll back this out to a weekly chart, 5-year potential base with a breakout. Next target's really up around that 1,200 zone. Now, the other one we'd like to take a look at, Palladium, still hanging out underneath that 2,500 zone. I can zoom in here on a daily chart for you guys. We have a series of higher lows that are getting put in, but continue rejection up at that 2,500 zone. So really a move underneath of 2,200 is going to be a concern, and a move up above 2,500 would be that breakout level that we're watching for. Now, last metal we'll jump in and take a look at here is copper. Copper continuing to act extremely well. Big breakout once again here today, continuing to push. Look at this on a weekly time frame, 5 years, continuing clear skies ahead. We have to pull back the monthly chart and go all the way back until 2013 before we start looking at any sort of resistance there. And again, that's at that 380 zone. We're going to see what happens when we get to that point. But really good action here. Clearly held over 3 and just a straight push through the next resistance level and continuing to grind higher. So very promising there in that market. Now, one of the most important commodities that we talk about, of course, is oil. Let's zoom in here on a daily chart, and we can clearly see that oil has now continued its move higher. We have broken over that 41.50 level that we talked at for a while. We then broke over the highs from August, and we are continuing to drift higher. Our next major resistance zone comes in around that 50 area. We're right around 47.5 or so right now, so a little bit more to go there. And let's back this up on a weekly chart and look at some of the major weekly levels. Again, we've got a very clear important zone in at 50, right? We can clearly see the importance going back over the last couple of years. Above 50, our next real resistance point comes in at about 65. So if oil is going to continue to head higher and it does get over that 50, we do have a lot of potential upside there back up towards that 65 zone. So very impressive action so far in oil after such a weak start of the year. The comeback there has been pretty good. So again, watch that 50 zone. Now, we always like to take a look at the smart money, dumb money confidence indicator, especially when it's stretched to an extreme, which it most certainly is. Dumb money is 90% confident here. Smart money's back around that 21 zone. So this continues to widen here. Again, eventually, these are going to close back up. Right, but we can continue to grind for quite some time. So this is not the signal that you got to get out of your positions or anything like that. But it is a signal that we definitely should be paying attention to what is going on and be a little bit cautious. And the next piece of information I'm going to show you is going to give you another reason to be a little bit cautious here. Now, things have been so fantastic in the market. We've got the S&P 500 with more than 90% of their stocks. All of the industries, sectors, and countries are all above their 200-day moving average, right? The market has been extremely strong. Now, when we go back and look at this data set over the last 30 years, we got about 8-10 points in there. What we can clearly see is that over the next couple of weeks, the market struggled, all right? And that makes some sense. When we really get that strong thrust push higher, right, the market tends to digest gains, and it can do that in two different ways. It can trade sideways for a while, or it can pull back a little bit. Now, historically, when things are that rosy and that good, we do get some pullbacks, all right? But you look at the size of the pullbacks here, they're not huge. We're talking 3% on the downside type of moves over the next 2 weeks, but the market is barely positive. Over the next 2 weeks. It's only positive 22% of the time. And what this is saying is in the short term we need to be a little bit concerned, but when we look at the long term here, folks, look 1 year later. 1 year later the market's positive almost 90% of the time with only one real pullback, and the moves higher are really on the larger side. Average reward about 11% to the upside, right? Things are good. Things are really good. In the short term, we may be at a position here where we see a little bit of a pullback, but historically, when you look at the data sets the way they are right now, it does bode well for the future. So keep everything in mind in regards to this, right? I know some people are talking about things being very stretched and there's a lot of concern. I have a little bit of that as well, but again, when I look at really what's going on breadth-wise underneath the surface, we are definitely having an expansion at this moment in time, and typically, even if that gets a little ahead of itself in the short term, it does end up following through on the long term, so keep that in mind. As always, guys, if you got any questions, feel free to reach out to me at mtedeschi at Perspective Wealth Planning. I'm more than happy to discuss anything market-related with you guys. You can reach me at 814-580-9881. I hope you guys have a fantastic week. As always, I'll see you guys next week.